Block Incorporated, used to be known as Square, absolutely down 20% in 2023. Is this stock absolutely still overvalued, or is this stock an absolute bargain right here, right now? There are some issues in this company right now. The CEO is out the door. She's going bye-bye. Let's get to it. Let's have a new CEO come in. Let's have a look at it right here, right now. Block Incorporated right here, right now at Barry Charles. Welcome back, guys and gals, to the channel. Hope you're having a great day out there. We're going to look at the key metrics for Block Incorporated, which includes revenue, net profit, earnings per share, dividends, assets versus liabilities, free cash flow, return on invested capital, shares outstanding, the whole lot right here on this jam-packed show for you today. And if you stay right to the end, we will give you a possible intrinsic value for you to do your own research more to see if this stock is right for you. Let's have a look at Block Incorporated stock analysis. Well, yes, Block Incorporated CEO Alyssa Henry is out the door, just been recently out the door, and the overall CEO of the company is taking over and just slotting in there. So a bit different works there. Block Incorporated is like a bit like Alphabet. They have a few different divisions, and Alyssa Henry was the leader of the Square division. They got rid of her, and the CEO, well, I'm not saying got rid of her, but moved away, and the actual CEO of the company has decided that I will take over that spot as well for the foreseeable future. So how does this affect the stock? Well, let's have a look at the stock here. We've got the revenue. Revenue is expected to be about 20 billion from 17.5 in 2022, so it's on the way up, so that's good. But net profit is negative. That's the problem. The net profit is negative, not good. Something they're going to have to work on. They were profitable in 2021 at 166 million. So they're down, so they're down to 540 million, and so it's not a good look for this company. Been profitable and now they've gone backwards, so not a good thing. Price range has been all over the show from $44 up to nearly $90. So that's where the company's at. The earnings per share is only just at 0.39. PE ratio is all over the show because they're negative. But also we're at 25, so depending on where you want to look at, there's no PE ratio at the moment because they're losing money. Short interest is 3%. I honestly thought this would have been a lot higher because of this. The stock is absolutely flying. I mean, not really flying, but it's still very highly rated. There's no dividend for this company, so you don't have to worry about that. The market cap of 27 billion. Is this going to continue? They're going to have to work their way up. The assets is 31 billion compared to 14 billion in liability, so that's very good to see out there. If you're an investor in this company, that's what you like to see. Free cash flow been all over the show. 83 million currently, was as high as 261 million in the middle of last year, and it had been a negative 3.7 million before that. So they're going all over the show with this investing at the moment with the free cash flow. So that's probably scratching your head if you're an investor in the company. The long-term debt of 4.9 billion or 4.1 billion, depending on where you look. Not good at all. So it's something they're going to have to really get going. They're really going to have to work on that. Maybe it's 4.1 million, sorry, maybe. Look at that, it might not be so bad. It's just something you have to look at, but I'm pretty sure it's 4.1 billion. So it's a lot of work for this company to do to get themselves going forward. Negative 2.99% in the return on invested capital is not good. So this company's got a lot of work to do to get themselves back to profitability, which is something they're going to have to do very quickly. Obviously, Cash App is the #1 app in the world, so that's something very positive for this company. If you're looking at the bull case, fintech is here to stay. You've got to get yourself invested. This is the way you got to get it done if you want to be absolutely going to the moon with the block. On the other side, it's fintech is dead. There's so much competition, and you are going to see at the end of the day that block is going out the door and crashing down with everyone else. Well, not everyone else, but that's the question mark you're going to have to say if you want to invest in this stock. Do you think Block Incorporated is going to be that company that's going to take over fintech and be the best one? Do you think Robinhood? Do you think PayPal? Do you think Apple Pay? There's so many options out there. Where is it going to lead? Who's going to be? Can they all be in the space and do well? It's another question you have to ask yourself, and where profitability is going to come from for these companies. So, as you're probably going to understand, when we have a look at these metrics, it's not going to be good for the company stock price as it is currently compared to where its intrinsic value should be. That's what you're all here for. This is what you want to understand. Let's have a look at the intrinsic value. Looking at a Graham's calculator from Trade Brains, very simple calculator, just to give you an idea of the intrinsic value of companies. So with this, we're going to look at a $43 per share at a 0.39 growth rate. 0.339 earnings per share at $5. Or the 5% growth rate, you're looking at $7.50 a share. Not good. If you go up to 10%, it's $11.60. But if we jump the earnings per share up to $2, then you're looking at a $29.70 stock. And it's at $40 right now in this current position. Well, above 40. What is there can I give you anything to say that this company should be an investable asset? No, not right now. $40 is just way, way, way too high for the stock. If you want my intrinsic value, it's $5. I really do. I think the stock's only $5. They've got too much issues at the moment to really say that the stock is a flying growth stock to get all this sort of stuff. They're losing money at the moment. They're really going to have to turn it around. If they do turn it around, they'll be working to get back to $40. If you those people that bought at $90, I'm not saying it's not going to go back to $90, but you could be waiting a long, long time for that to go back. Because at the end of the day, it's all about, you might have the voting machine in terms of the stock that is going up and up and up, even though it's dropped from the $89. But at the end of the day, profits of the company at the end of the day are going to weigh out any of the voting machines up and down we've had. At the moment, it's not looking good. If you think it's going to turn around, maybe you should look at investing in the stock. But for me, I'm very much staying away from it. If it absolutely collapsed to somewhere near $10, then maybe I will look at it. But at the moment, it's not worth my deal. I think you get a better deal. Not financial advice at PayPal right now, because I think PayPal are going to drop as well. But I just think if you talk about risk reward at the moment, I think PayPal is a better risk reward at the moment. But if Block do somehow turn these metrics and really, really fly up, because they do have the #1 app, but they've got to somehow get this money sorted. If they do turn that around, if you think they're going to turn that around, then maybe it's a stock to look at. But anyway, that's just giving you a stock analysis of Block Incorporated, formerly known as Square. I hope you've enjoyed the video and got a bit of insight into Block, and hopefully you've learned something. Remember to like and subscribe to the channel and share this video with your friends. Have a great day out there.